Welcome to Let's Talk Investing, a co-production of the Globe and Mail and the Investor Education Fund. I'm Rob Carrick, personal finance columnist at the Globe and Mail, and with me is Gordon Pape. He's a well-known investing author. Gordon and I are going to talk about exchange-traded funds. We'll call this segment ETFs 101. Gordon, help people understand what ETFs exactly are.
Okay, technically ETFs are an index fund that trades on a stock exchange. As simple as that. There's some confusion, I think, however, in people's minds between an exchange-traded fund, which is an index fund, passively managed, tracks a particular index, right, and a closed-end fund, which also trades on a stock exchange, but it's actively managed. There's somebody there who's actually calling the shots as to what to buy and sell.
Right. Now, a closed-end fund is almost like an exchange-traded version of a mutual fund, right?
Yes, exactly.
Okay. So we have ETFs. There's index funds. Yes. They're traded like a stock, which is nice because you can buy it any time of day rather than mutual funds, which, if I remember correctly, you can only buy those once a day and up till about 2:30 p.m., right?
That's right. Usually 3 o'clock is the cutoff time.
Now, fees are a big differentiator between mutual funds and ETFs. How do they differ? How are they different?
Well, ETFs have very low fees normally. They will range, but there's some as low as 0.17%. That's extremely low. That would be, for example, on the iShares TSX 60 fund. They can go over 1% on some of the more specialized funds, but on the other hand, if you're looking at say an index fund that is a mutual fund, you're looking at fees probably in the area of 1 to 1.5%. There are some that are lower, but they're usually a bit higher than on the ETFs. And if you're looking for an actively managed fund, of course, they're much higher.
Now, Gordon, what's your opinion about how appropriate our ETFs are for mainstream investors?
Well, I think they're excellent if they're properly used, and this is one of the problems. There's so many choices out there that sometimes they're not used very well. But if you stick with the basic ETFs, that is the ones that track the major indexes, like the TSX Composite or the S&P 500 or something like that, they are very good. And I especially like the bond ETFs. I think that they are an excellent way to invest in the bond market at a very low cost.
Now, ETFs. Investors have probably heard a lot about them. They're in the news a fair amount. They've grown their assets a lot, so that's got them some coverage. But are they interchangeable with with regular mutual funds in terms of building prudent, unflashy, sound portfolios that can last decades or two? Are they just as good?
Yes, they're just as good, again, if you choose the right ones. And I've put together, for example, some model portfolios for my Mutual Funds Update newsletter, and they include both ETFs and mutual funds in the same portfolio because it really depends on what you're looking for and how well they're designed. But, for example, there's a iShares bond fund, XBB, that trades on the TSX that I just think is a core fund for almost any portfolio.
Okay, last question. That has to do with the costs of buying ETFs. You have to buy them from a brokerage firm. If you use an online broker, or otherwise known as a discount broker, what fees could you expect to pay to buy an ETF?
Well, they will vary, but in some cases, again, it depends on the size of the order and who you're dealing with. But you could probably buy, say, 100 shares in some cases for under $10.
Okay, thanks, Gordon.
You're welcome.